Hello comrades. Imagine making money while you sleep. Imagine growing your wealth on trees. Imagine retiring from your full-time job than ever before and starting a new life. All these things could be done by means of investing in stock market. Now, while most of the people think that stock market is a gambling or a scam, few people understand the game pretty well, implement the right strategies and take their financial journey to the next level by means of getting valuable returns. Now, if you're really a beginner and if you really don't have any idea about what is a stock market and how does it works, you start to have various confusions, whether it's a risky game or whether it's a scam or gambling, or it is really a better way for your financial journey. Watch this video till the end if you really want to know about the basic fundamentals of the stock market, and trust me, you can start your stock market journey in the year 2025 by understanding the various concepts of the stock market. So in this video, we're really going to discuss about what is a stock market and how does it works. What are the types of investments that you can make in stock market? Number 3, what are the ways to make money in stock market? And at last, what are the books recommended for you as a beginner in order to learn a lot more about stock market and investments? So if you're curious enough, let's dive in. Alright, let's understand some basic concepts of the stock market and let's see how it works. Now imagine person A wants to start a business and he needs a funding of around $1 million. Now he has already 3 options. First thing is self and own funding. And number 2, he can really hire some friends or partners. And coming to number 3, he can really start getting funds from the stock market. Alright, now imagine he's really going for stock market and he really want to start a company XYZ. Now the funding required is around $1 million and he's really having a self-funding of around $500,000. Now he needs around $500,000 additionally to start a company. So what he could do is he can really go to the stock market and register his company and open his way for new investments for around $500,000, and he can really welcome new retail investors like you and me into the company. Now this $500,000 shall be divided into 100,000 subparts. Now each part has a value of around $5, which is considered to be the face value. Now the people who start to buy these 100,000 shares are considered to be the stakeholders or the shareholders or even the business partners of the company. Now regardless of how much ever the share they own, they are considered to be the stakeholders or the shareholders. So like person A, thousands and thousands of people list their companies in stock market. Now coming to United States of America, there is a stock exchange which is called as NYSE, New York Stock Exchange, where 2,400 companies with a market cap of around $28 trillion. And coming to India, there is BSE and NSE. BSE stands for Bombay Stock Exchange with around 5,300 companies, and NSE, National Stock Exchange, with around 2,600 companies. Alright, now here's where you really need to understand about a very important concept called as key index. Key index is an indicator of overall health of the stock market of any specific country. It refers to the overall market trends and sentiment of each and every investor. Now coming to BSE, the key index is said to be Sensex, which represents the top 30 companies of the stock exchange. And in NSE, the key index is said to be Nifty 50, which represents the top 50 companies of the list. And coming to United States of America, it is said to be S&P 500, which includes the Fortune 500 companies of the list. Alright, now do you really understand what stock market is? It's a place where you can really buy and sell businesses and get profits. And if you are really a business owner, you can seek funding from the retail investors like you and me in the public. Alright, let's see how can you invest in stock market as a beginner. Imagine the 2 stock exchanges, BSE and NSE. Now this stock exchange is directly tied up to stock or financial brokers. Now these brokers shall suggest you to invest in right stocks, and they also give you a lot of guidance to build your personal portfolio. Now through these financial or stock brokers, you can really buy or sell stocks, and both of these stock exchanges and these financial brokers are regulated by SEBI. SEBI stands for Security and Exchange Board of India. So coming to India, BSE and NSE, SEBI is the exchange board and they really regulates the rules and norms. So coming to US and other places, you have different regulatory body. Alright, so here's where you really need to understand that these stock brokers never work for free. These people also take commissions from retail investors like you and me by buying and selling of stocks of any particular company. Alright, if this is very clear to you, let's move to the second part of the episode. What are the types of investment that you can really make in the stock market? Now generally there are 2 categories. First one is short-term investing and second one is long-term investing. Now coming to short-term investing, it's like a full-time job. If you really want to become a full-time trader, or if you really wish to spend 8 to 12 hours every single day, you can really go for this. Because here's where you really need immense amount of skill sets and you really need to know about advanced level of algorithms, trading techniques and so on. So this is also a high risk, high reward game. Now here's where most of the people tend to lose money, tend to be defeated, because it's really hard to win each and every single day in terms of intraday trading or forex trading or any other trading game which they come across. Only very few people survive and sustain in the game of intraday trading or forex trading or whatever. So if you really want to work as a full-time trader in the stock market, short-term trading is the best platform for you. But all what you need to do is you need to spend minimum 8 to 12 hours a day. You really need to know about technical analysis. You will need to focus on pie charts, trade indicators and trading volumes rather than the fundamental value of the company. Alright. Also you need to have very good internet connection compared to the normal ones. Also you need to have high quality system compared to the normal PCs and laptops. You really need a specific one, because every time you really tend to apply those algorithms, and also now every time you really need to implement those algorithms or automated traded systems, high specific system is needed to implement those on your trading platforms, and that could really help you to get a valuable amount of profits. And as a trader, it's really a do or die game for you, because day 1, day 2, day 3 you can get very good profits, day 4 you can lose it all. So as a trader, there's a lot of risk involved. Also you need to be highly skilled and highly valuable in the market, because again it's risky game for retail investors like you and me. Alright, now if this is very clear to you, let's look about the long-term investing in the stock market. Now coming to long-term investment, there is a lot more things which we could really explore. So coming to first thing, if you are really a beginner, if you're an absolute beginner, if you really don't know what stock market really is, you can start with SIP, which is nothing but systematic investment plan. If you are really good enough, if you really occasionally know about stock market, you can go with mutual funds. And if you're better and if you're willing to take a little bit more risk, you can seek exchange traded funds, index funds, or you can really pick up individual stocks. If you really know to understand the fundamental values of the company, if you're familiar with the fundamental concepts, if you're ready to analyze the financial statements and fundamental values of the company, if you really know to read about the profit or loss statements, growth potential, also the industrial position, how the industry has been really there for quite 4 to 5 years in the particular country, and all those things is really matter to you, because those things are really going to help you to choose the right stocks in this country so that you can really invest it and get profits in upcoming days of the life. Now this is also considered to be a low risk and high reward game. Why? Because you can hold your stocks for 1 year, 2 years, 3 years, 5 years or even 10 years, and you can probably get the money, or you can probably withdraw your funds whenever you get an excellent profit. Also here's where you really need to understand that the power of compounding takes place. Trust me, first year, second year you could probably see no or minimum returns or no or minimum growth. But as the time goes on, the power of compounding takes place, and it shall give you a significant returns that could really beat inflation and help you to outperform the market overall. And the stocks that you really pick up, if the company performs really well, you could probably get a better and guaranteed returns in upcoming days of your financial journey. Alright, if this is very clear to you, let's move to the third part of the episode. What are the ways to make money in stock market? Now, there are 2 ways to make money in stock market. Either if you're a trader or long-term investor or whatsoever, there is only 2 ways to make money in stock market. First thing is capital gains, and second thing is dividends. Alright, now let's understand these 2 concepts with the help of a story. Alright, let's understand capital gains with the help of a story. Now going 10 years in the past, let's say a person A in 2015 has 2 choices. First thing is to buy an iPhone worth $1,000, and second option is to invest in Apple stocks. Now in 2015, iPhone 6s was launched, which cost around $1,000, and you decided to buy it. Now over the years, the iPhone 6s shall become outdated, and by 2025, the same phone has little to no resale value. Alright, now this particular $1,000 which you invested in 2015 shall become absolute zero in 2025. Now let's go to option number 2. In 2015, the Apple shares was around $30, and now with the same $1,000, you can receive around 33 Apple shares. Now over the time period, the Apple grows significantly due to innovative products and services. So by 2025, Apple has a face value of around $180 per share. Now you have a total share worth around $5,940. Now you have made an initial investment of $1,000 in 2015, which is 33 shares worth at $30 each. Now subtracting the $5,940, which is a current value, excluding your $1,000 which was an initial investment, you have around the profit of $4,940. Now this is said to be capital gains of your stocks. Now coming to another example. Let's say that you have invested in Eicher Motors in 2015. Now Eicher Motors is the parent company of the Royal Enfield. Now instead of spending lakhs to buy a new Royal Enfield, you would have spent 1 lakh Indian rupees over 68 shares of Eicher Motors, costing around 1,460 each. Now by 2025, Eicher Motors price is around 5,200, which has a value of 3.5 lakhs. Now you have a capital gains of around 2,55,000 approximately. Alright, so this is how the capital gains works. So if this is very clear to you, let's see how the dividends work. Now imagine you choose to invest in ITC company in Indian stock market. So once again, as a retail investor, you invested around 1 lakh rupees in ITC shares by purchasing 500 shares which worth 200 rupees each. That year, the ITC announced the dividends of around 8 rupees per share. So 500 rupees into 8, it's around 4,000 every single year. Now here's where you could able to get an additional income without selling any shares or without making any profits. Alright, so by 2025 the IT shares rise to 450 rupees. Now your worth will be around 2,25,000 rupees. Also the dividends rose to 12 rupees per share. Now you earn around 6,000 every single year additionally without selling any shares. Now what's your total worth approximately? Your dividend income is around 50,000 rupees for the past 10 years. The capital gain is around 125,000. So your total wealth is around 1,75,000. Alright. Now here's where you really need to understand 3 powerful factors about the dividend stocks. First thing is passive income. You can get regular cash flow from dividends. And number 2, it's capital appreciation. It could also help in increasing the value of stock over time period. Next is reinvestment over profits. So you can still invest the dividends to buy more and more shares, which would probably boost your returns further in upcoming days. So do you guess what dividend really is? It's nothing but some companies pay up some part of the profits to shareholders and dividends. It's like a small reward for owning a stock. Alright. So if this is very clear to you, let's understand one more important concept which is called as IPO. IPO stands for Initial Public Offering. Now let's understand with the help of a story as well. Alright, let's assume a company called as Bright Tech Innovations, which is privately funded by a venture capitalist and grown significantly. Now in order to expand its product lines and enter new markets, they need an additional capital. So with the help of an investment bank, they set a value of around $20 per share and issue 5 million shares to the public. So when IPO is launched, the investor starts to purchase shares on the stock exchange at an opening price. So if the company performs well in upcoming days of the years in a significant manner, the share price may increase, benefiting the people who already invested in the IPO. In short, IPO is a way for the companies to raise money by selling the ownership in terms of shares to the public people, allowing the retail investors to own the part of the company. Alright, so here are 3 reasons why company goes for an IPO. First reason is for raising capital. Now instead of going for bank loans or instead of going for more and more venture capitalists, all what they can do is they can hire retail investors like you and me for additional funding. Number 2 is liquidity founders and early investors, which could probably allow the early investors or founders to cash in on their company shares. And number 3, brand recognition and credibility. They can publicly list their companies on stock exchanges in order to enhance the company's reputation and make it more and more recognizable. Alright, if this is very clear to you, let's move to the last part of the episode. What are the books recommended for you to study a lot more things about stock market as a beginner? Now first book that I recommend is Rich Dad Poor Dad. Now this book really speaks less about stock market, but this could really be a beginner's guide for you to start a new financial journey. Number 2, Intelligent Investor by Benjamin Graham. Now this book is said to be the best book for investing, teaches the fundamentals of value investing. This book also covers various principles which could probably help investors to make smart decisions in their investment journey. The author Benjamin Graham also helped Warren Buffett in order to shape his investment journey throughout his life. And number 3, A Random Walk Down Wall Street, that has been written by Burton G. Malkai. Now this book really explains about the basics of stock market and also speaks a lot about investing in stocks, bonds and mutual funds. It's all about long-term and diversified investments, and if you really want to start long-term journey in stock market, this book is very good for you. Alright, so now summarizing overall, coming to number 1, stock market and normal market doesn't differ much. Normal market you can really buy different commodities, whereas in stock market you can trade businesses, you can buy businesses and you can still have better profits. Now if you want to be a short-term investor, you have to work full-time and you need to spend 8 hours, 12 hours or even more than that. You need to invest heavily on systems, internet connections, and also you need to spend heavy time on education. And there is only 2 ways to make money in stock market. One is through capital gains and another one is through dividends. So start your investment journey in this year 2025, because a great man once said, you cannot work for 24 hours, but your money can. And he is none other than Warren Buffett. Alright, so thank you very much. Thank you for watching this video. Bye-bye.